we wouldn't be half as successful, or we wouldn't maybe even be successful at all, because nobody in their mind has all the right answers. I mean, the markets teach you humility. So you need idea meritocratic decision making to get the best ideas to raise your probabilities of being right. At least that's what's worked for us. To think about your savings and how much money do you have for savings. And the best way to think about that is to think, how much money do I spend each month? And how much money do I have saved so that I can, how many months am I going to be okay without that? And to value savings, right? And calculate it, because savings in that is freedom and security, and think about what that is. So I think there are 3 stages in life. This is how I approach it. First stage in life, you're dependent on others and you're learning. Second stage in life, you're working and others are dependent on you and you want to be successful. As you go into the third stage in life, where you want others to be successful without you, that's the stage. That's where I am. That's what 2017 represents to me. That's why I wrote that book. That book is to pass along to people those essentially recipes for handling different situations that I could pass along to be of help for others. Because my greatest enjoyment and satisfaction is to watch other people be successful. How do I save well? What should I put my saving in? And when thinking about what you should put your saving in, realize that the least risk investment that you think from volatility is the least risk investment, which is cash, is the worst investment over a period of time. And you could judge that by judging the rate of inflation in relationship to the after-tax income you're going to earn. So if you have an inflation rate that's 2 or 3%, and you're earning 1%, and you have to pay taxes on that 1% or the 1 or 2% that you're going to get, you're going to get taxed essentially at 2% a year, and that's going to be a problem. So you have to move into assets that are other assets that are going to do better over a period of time. You only have to do 2 things in order to be successful. You have to know what the right decisions to make are, and you have to have the courage to make them. And when you're making, to know what the right decisions are, you got to know that they're not necessarily the ones that you're stuck in your head with your opinions, right? Right. So you've got to go beyond your opinions. So I think it's one of the greatest tragedies of man, from mankind, that individuals hold on to their opinions and don't put them out and stress test them. So put them out there, stress test them, and get them from others so that you can raise your probabilities of being right. That's how we've raised our probabilities of being right. The most important thing I can convey to you is to diversify well, because I can guarantee you that one of those assets, and you won't be able to pick the right one, will be disastrous in your lifetime, that you will lose half of that savings if you're in the wrong one, and you won't know what the right one is. And so pick different countries, pick different asset classes, and I could probably take too long explaining how you might do that. The real question is, can you get past your egos and your blind spots? Can you, in an idea meritocratic way, find out what your weaknesses and your strengths are? Be cautious about debt. When you're thinking about debt, think about, is that debt going to help my savings, or is it going to produce an income? Sometimes debt, like buying a house or buying an apartment or buying an asset, it produces forced savings. Forced savings is a good thing. Or if you're taking on debt and you're thinking, am I going to have that debt in an asset? That asset better produce more income than the cost of your debt. If you're using debt for consumption, that's not a good thing to do. Okay, you're giving up that safety. Are you going to have autocratic decision making, like the boss knows the right answer and he's going to tell you? Or are you going to have democratic decision making, which is one man, one vote? This whole idea of believability decision making is important. And then in addition to that, what was key is write down the principles. Do the opposite of what your instincts are. If you're going to play the game, it has to be the opposite of what your instincts and the crowd says, because the market reflects the crowd. So you want to buy when no one wants to buy, and you want to sell when no one wants to sell, right? Right. So, and that's emotionally difficult, and probably you're not going to play that game well, because it takes a lot of resources to play the game. We spend hundreds of millions of dollars each year to try to play that game well, and it's a tough game to play well. So I would caution you about the market timing game, but I would say that if you're going to do it in the ways that are uncomfortable, because they're opposite your instincts. In order to be successful in the markets, you have to have independent thinking, because the consensus is built into the price. So I've got to have a bunch of independent thinkers, right? And we better get at what's true. So that idea of radical truthfulness and radical transparencies and having procedures to get by them, being anti-meritocratic, is fantastic.